Hi there, Vince Mohr, your mortgage professional on the Central Coast, Central Valley, and beyond. And today in this video, I'd like to talk to you or update you on the all-in-one loan, the smarter way to borrow. And if you find these videos informative, please consider subscribing to my YouTube channel as I provide lots of good information on home loans, real estate, and the market in general. Now that I've had several months under my belt as far as originating the all-in-one loan and crunching the numbers for folks, I do believe that it's the loan of the future. Certainly the baby boomers, they don't need the debt, mortgage or otherwise, and the X-Gen and the millennials don't want it. Now that I've had the chance to originate the all-in-one loan as well as crunch the number for several folks, it does pay off. Just paying the same principal and interest payment that you would normally pay, it does pay off in about plus or minus 10 years. And the few folks that I've originated a loan for, they're actually paying more. They say on average, people with the all-in-one loan will reduce the principal balance each year by at least 18% compared to a 30-year fixed where it's 2 or 3%. So they're very excited about being able to just pay more above and beyond their normal principal and interest payment, so it'll pay off in just a matter of a handful of years. So, but they know that they can always get that equity back out if need be for an emergency or take a trip or whatever the case may be. Finance, college education or consolidate other debts. It's available. The equity is available to them for 30 years. So unlike a traditional 30-year fixed where you pay more on the loan, and only about 6% of Americans do pay more on their 30-year fixed, just because they know that without refinancing, they can't get to that equity. It does take on a 30-year fixed. It takes you to about year 22, 23 to where you've paid as much down on principal as you've paid in interest. So in about 15 years to get where the payment is 50-50, 50% going towards principal and 50% going towards interest. So just to kind of recap as far as what the all-in-one loan is, it's basically a HELOC at its core. It's a first trust deed HELOC. Does go in first position, which is unique. It is set up for 30 years. Like I mentioned, I do believe it's the loan of the future. Just to kind of give you an example, again, it's let's say you had a couple that has a $400,000 loan and they make 10 grand a month between the husband and wife. The 10 grand comes in, goes right off the top. So now the balance, which is being calculated nightly, the interest is being calculated nightly on whatever the balance is, and it's there's a margin above the monthly LIBOR. Of course, we've talked about this in the past. The monthly LIBOR is actually the stablest index in the world. I believe that there's $5 trillion in funds that make up the the monthly LIBOR. So very, very stable, very slow moving, kind of like the 11th district cost of funds used to be. But so anyways, they calculate the interest nightly. So in our example, the balance now is $390 with this couple. They go a couple of days, 3-4 days, and haven't tapped into their money, and then then they start writing checks using their ATM card, having automatic payments because it's combining this loan's combining their home loan with their personal banking. Maybe by the end of the month they've only spent $8,000, so now the balance is $398. 10 grand comes in and goes right off the top, and that process starts over and over, month in and month out. So now it drops down to $388, and again, as they start tapping into that money or using that money, it'll just kind of repeat. But it is paying principal first, not interest. So again, of the folks that I've crunched the numbers for, it's plus or minus 10 years that their loan is paid off. If they pay more, then of course it's just going to accelerate that, and that's where they can pay it off in 8, 7, 6 years. So it is, it is a financial tool, if you will, helping people to get out of debt, get rid of their house payment. And if you think about not having a house payment, just think about all the other things that you can do, with investments, all the things you can do financially or otherwise. It would be awesome not to have a house payment. I think any of us can agree with that. Thank you for taking the time to watch this video. And again, if you found the information to be informative, please subscribe, like, and share this video. And if I can assist you with the all-in-one loan, or with or someone you know, or with any of your home loan needs, please let me know. I wish you all the best.